Good morning, Wall Street winners. It is Wednesday, July 24th, and we have had some earnings come in yesterday after close. Very mixed results from what we're seeing across the companies we follow. But if we look at the indices, I think this will show a tale of kind of what the earnings are leading to. We are in the red across the board in all three indices today. The NASDAQ down the most, 1.15% going into the open right now, about 229 points in the red. S&P 500 down about 43 points or 0.76%, and the Dow Jones Industrial Average down 196 or 0.5%. And where all this is coming from is the mixed earnings reports that we've seen over the course of the last day. So Canadian National Railway came out, and if we take a look at what the earnings said, they announced their results, and for the most part, revenue was up and increased about 7%, but they didn't really hit across the board. They were down a bit on your operating income, showed an increase of 2%, but probably not up to expectations there. And then diluted earnings per share of $1.75, which was a decrease of 1%. So mixed bag there. We flip back over and check out one more that had earnings, or a couple more that had earnings. Some of the big tech names. So the big one, which was, and probably the biggest surprise, Google actually came out and beat on both earnings and revenue. Ad revenue in YouTube was down slightly, but they really got hammered because they increased their CapEx expenditures around AI between $500 million and $1 billion for the year. And although $1 billion is a lot of money, to a company like Google that's generating billions and billions and billions of dollars, it's really an insignificant increase for something that is really going to drive their business going forward. I mean, this is an investment in their future that would go well beyond, say, a share buyback or anything of that nature. And they're off almost 3.5%. So I was expecting Google to jump this morning and after hours yesterday. And it did initially. It popped up to 186 from a 183.60 close. But then it started to decline. It really had a great deal of volatility after the earnings announcement, down in the 179s up to 185. It was all over the map as people were trying to digest the earnings information and report. But in the end, one of the tech companies to release, one of the big Mag 7 companies to release that beat on earnings and revenue, and it is being hit in a negative way. I think this is an extremely interesting buying opportunity because Alphabet or Google is certainly a company that is a leader in the AI space, and the investments they're making, if executed properly, which Google has demonstrated they have the ability to do, will definitely bear fruit going forward and will be positive for the company. Now, another company affected by this, and maybe another announcement yesterday, is Meta. Now, Meta doesn't announce for another week, a week today, but they're down 2% based on this drag on the overall Mag 7 and tech sector. But they were up yesterday a significant amount as well. And a lot of that may have been due to an announcement around their large language model being released, an updated version of that being released. They had some big announcements through Zuckerberg and some others. And that's an open source model that's available for people to use. I think Meta at 478 is a steal right now. I think we're going to see strong earnings. They may be penalized as well, like they were in the last quarter's earnings, around their CapEx expenditures, similar to Google. But this is something that these companies have the money to do and really need to do to maintain their lead in AI. So this is an investment that, again, going forward, it's a blip in the radar, and it's going to make these companies much more successful going forward and allow them to keep their position in the marketplace and not lose traction. And then we have Tesla. and Tesla got slammed yesterday. Not surprised, down 9% or 8.5% this morning. They missed on revenues. Car sales are down, and they didn't deliver on the results. I'm surprised it's not down more than 8%, to be perfectly honest. This stock has had a huge run over the course of the last, say, month or so, and has climbed from the 181 range up to the 265 range. For no real apparent reason. I mean, they're not growing. They've lost their stature as the largest EV maker to BYD out of China. The company has a ton of positive things going for it and a ton of future prospects. But right now, we're just in a segment where consumers aren't spending. The interest rates are too high for them to support a new car payment. And we're seeing that from the financials as well. So if we take a look at Visa announced yesterday after market, and they're down 3.5% right now. And that was simply due to a revenue miss. Earnings, I believe, were fine with Visa, but the revenue missed. So they were showing that growth just wasn't there for them, and they're positioned as a growth stock in the financial services sector. So we're seeing a slowdown across the board in consumer spending. We're starting to see now some of the Fed chairman or the folks involved in the Fed speak up and say that we're ready for a rate cut right now. So we'll see whether that happens in July. I think a July rate cut, which will be talked about next Wednesday, would be a shock to the market. I don't think anyone is expecting that in July. Most people are looking at that for September, but it is a possibility at this point. We'll see what jobs numbers look like on Friday. But what do we do today? What do we do in the market today? Where can we look for an opportunity to make some revenue? Well, one of the areas that seems to be favorable is small and regional banks. We're seeing a shift into what's called the Russell 2000. So the small cap stocks, I'm not a big fan or believer in this shift. I think it's a short-sighted move. But there are some strong companies in the Russell 2000, and I would stick to those that have growing revenue, positive earnings, and strong cash flow. And there may be an opportunity to certainly make some profit out of those. I would be looking to your more favorable regional banks right now, and financial services companies. So I am still a believer in SoFi. I'm watching it come off of its recent high of 780, and I'm just waiting for it to find a bit of a new bottom here. I have not bought back in since selling, so I'm waiting for that stock to find a new bottom. I think it's going to do that around the 7 to 720 level, and then I think we can see an uptick in that as well, and as we get into earnings there. One of the regional banks that had disappointing earnings, Banc of California, although in my opinion not that disappointing based on their sale of some of their residential mortgage portfolio to help with their overall capital. This is a stock that has sold off. I think we're going to see a rebound here, so I'm watching that. I'm not ready to buy into that. I'm going to wait on Visa. I think Visa is going to come down more. So we have some maybe put opportunities where to buy a put option would be an opportunity where you believe the stock is going to continue to go down over the next little while. I think Visa is an example of where we might find that. Where I think we're going to see some upside today after market is with Raymond James. So I'm going to be watching Raymond James Financial today. They make an announcement end of day after market close, and I think we're going to see some positive earnings come out of Raymond James, and I think we could see a $2 to $4 pop on that, which is a nice 2 to 4% gain in that stock if that does occur. So that's one that I'm taking a look at today. If we scroll back up to tech, I believe that Google is a great purchase if it opens $6. I think it's going to correct back up today or tomorrow and get back up into the 183, 185 range. I certainly think it'll get there within the next 2 weeks. We're seeing a bit of a drag on NVIDIA. NVIDIA is one of the later stocks to announce, so I'm holding off on NVIDIA. I still own some NVIDIA, but I am not purchasing any new NVIDIA at this point in time. I would pick up some Meta. on a $10 price drop today. That would be an interesting addition. I think that by next week when earnings come out, we'll see that definitely come back from that $10 and probably get up a little higher than that into the, I'd say they're going to get up into the 490s, 500 range. ARM is one that provides ongoing daily volatility. So if you're willing to just watch this throughout the day and figure out where the resistance level is on the low side and where the support level is on the high side, you could trade this stock all day long and make a killing over an annualized period. I'm waiting on Microsoft to fall back a little bit more, so I'm not picking up any more of that right now. And then I'm really just watching for anomalies in the market, stocks that are off significantly that may provide an opportunity. We do have Valero reporting. Oil, crude, has just been crushed over the last week or so, down to under $78 for a barrel of crude based on September 24 futures. But I do expect Valero earnings on Thursday morning to be positive, and I do expect this stock to be in the mid 160s in the next week or so. So I'm going to keep an eye on that, and that's really where we are right now in what we're tracking, not looking at a lot of others at this moment. So good luck in your trades today. If you're liking these videos, please hit the like and subscribe button, and we'll talk to you again soon.